right, the Federal Housing Administration is backing low-income mortgages with as little as 3.5% down. Meanwhile, in today's Wall Street Journal, American Enterprise Institute's Peter Wallison points out that existing loans backed by the FHA are going bad at a rate of 20 to 30%. Is the FHA making the same mistake all over again? Should it raise the down payment? Yes, says Representative Scott Garrett, who is sponsoring the legislation to do just that. No, says mortgage industry consultant and former HUD official Howard Glazer. Thanks to both of you for joining us. I want to read this to both of you because we just this second are getting a statement from the FHA. They say they continue to believe that there are better ways to manage their risk than to increase the requirement. This refers to the down payment. There is, in fact, no data to support the claim that raising the down payment would impact risk and performance in any measurable way. Scott, do you buy that?
No, not whatsoever. I mean, I've seen the data on this as far as performance of when you have a low down payment, no down payment, higher down payment, and the statistics show that the higher the down payment, the better the performance of that loan. So I don't know what they're talking about.
Howard, what do you think?
Well, let's put it in perspective. Bank of America today announced a $1 billion loss in their third quarter on consumer loans. FHA's loss this year, zero. By the way, FHA's loss for 75 years, zero. And during that period, hang on a second.
Howard, can I challenge you from the Peter Wallison article and other? I've covered this story. FHA default rates year on year, last 12 months, 76%. And even in the fatter periods in the mid-2000s, those default rates were 20 to 30. They've moved to 76. Howard, my friend, what are you talking about?
Those numbers are not, I don't agree with those numbers. The current default rate in FHA, 1.25% cumulative rate. Some of the numbers you're talking about are 30-year claim rates, and they're not default rates.
Well,
the main point is this, Larry.
This is the first line from the Wall Street Journal today. It says that they will suffer default rates of more than 20% on 2007 and 2008 loans. You're saying that's a lie? Those are not
default rates. That's a 30-year claim rate. It's something different. The current default rate overall is 1.25%. Here's the point. 75 years, FHA has not cost taxpayers a dime. They've had a down payment lower than the current requirement for most of that period. It isn't just about down payments. Down payments are important. They're only one risk factor.
Well, why is the OMB director saying that that's not the case when he said it was between $15 and $20 billion that this is what the FHA is actually going to cost the government? So why is he?
Well, there is no cost thus far to the government, and according to FHA's numbers,
he's wrong as well.
According to FHA's numbers reviewed by OMB, there's a $30 billion capital reserve FHA has today, and if every loan went bad that is troubled today, and they had no new premium income, they'd still be able to pay those claims for 5 years. FHA is basically sound. People are running around with their hair on fire, making claims that just aren't true about FHA. At this point.
Okay, so the OMB is wrong, Peter Wallison is wrong, the FHA is wrong, and the FHA is the only one that's right.
Can I just ask Congressman Garrett? I mean, I've covered this FHA story. They're on the verge of bankruptcy, according to a lot of people. Their own reports are showing the large spike. I'm telling you, 76% default rate is occurring, and while we're at it, what is wrong with an old-fashioned 20% down payment with income documentation and so forth? Why is it, as Peter Wallison asked, that we keep giving away these cheap loans backed by the government to people that really can't afford it?
And I agree with you, and I wasn't even willing to go that far to the 20% down payment. We're at 3.5, and actually when you roll in the down payment that they're able to do, it actually goes down to around 2.5%. So I'm not going up to the 20. I'm just saying we were just going at 5% down payment.
Here's the problem. Here's the problem with going from 3.5 to 5%. Yeah. Every risk analysis shows that there's no real material difference in risk. But what it does do is close the door to qualified borrowers. Keep in mind, the FHA is serving a market that the private market has abandoned. Last year in 2008, FHA had a 20% market share. They did 51% of all the loans to African Americans, 45% to Hispanics. The private market is not serving. Those are qualified borrowers who would be shut out if you raise the down payment. But there are other risk factors that are far more important that FHA doesn't do. No stated income, no piggyback loans, no investor loans. Those are the problems that brought the private market to its knees, and FHA is not in those markets.
I thought this was a subprime crisis. Isn't that the way this ball got started rolling?
No,
in the first
FHA
place?
Doesn't do subprime. It's a misstatement. FHA does not do subprime loans.
They back low-income loans.
They do no stated income. Larry, it's a fact.
You say qualified buyers. I hate to give an opinion, you're the guest, but I say that is a big issue. Fannie Mae, Freddie Mac, FHA, there are a lot of housing experts and financial experts, Howard, a lot of them, you may disagree with them.
I do disagree.
But that they were never qualified buyers, that were throwing
Not
housing
an FHA.
money at people that can't afford it. That's why hard-headed fiscal guys like Scott Garrett have stepped into the breach. You're telling me, he's essentially saying nothing's wrong, Scott.
No,
would
I'm
you
not saying that.
respond to that?
I'm not
I
saying
haven't heard
that.
a single criticism from you, Howard, on this point.
FHA
Scott, would you
faces-
respond, please?
Well, obviously there is something wrong. And Wollaston's article in the Wall Street Journal today is excellent when he points out that it is because of government intervention, government policy, that over 2/3 of the subprime loans have either been dictated by the CRAs or financed by the FHA or bought by the FHA and the GSEs. It's been the government that
let me
set
ask
up this
Congressman
problem.
Garrett. Congressman,
yeah.
how many stated income loans did FHA make last year? The answer is 0. How many investor loans did they make? 0. Those are the loans that created troubles. Those are the subprime loans that created troubles in other markets. FHA is not in that market.
They're just losing money hand over fist. The debate, Howard, the debate is whether they're going to have to get a replenishment of their credit line, whether they're going to go bankrupt. That's the debate. The guy's been testifying before Congress, acknowledging that he's in a heap of trouble. You're saying this is like one of these Soviet rewrite history things.
No,
the
look,
commissioner itself, Howard,
Larry,
is
here's
saying
what the commissioner
he's got
says.
big problems.
The commissioner says that the FHA faces risk based on economic risk because no one is immune from lowered house prices in this market. And that's true. FHA has a big market share, and they face big market risk. But raising the down payment is just going to shut people out without improving their risk profile.
Well, can I
Real quick.
You know, this is one place where I agree with Barney Frank. Barney Frank on another area says that we should have at least a 5% skin in the game for the banks that are issuing these loans. Why shouldn't we have down payment here as well, 5%?
How about 20? How about 20? I can't buy a house without 20%. I can't buy a house without 20%. Right. I'm being discriminated against.
It's the American dream, not the American right. Let's go. All right, thanks, guys. Thanks for joining us. We appreciate it.
You know what they do say? The FHA loan is the new subprime. I can't tell you how many realtors have said that to me. But we're going to move on here. A quick break, and then a look at the American consumer and whether there's signs of strength that will boost retailers as we quickly approach the holiday shopping season. The retail reality is straight ahead for you right here on The Call. We are back for you in 2 minutes.